All right, welcome to the weekly meeting, January 18th, 2025. This meeting is about, I want to talk about entries, man. We watched the Oliver Velez video about the cons of trading. Please, if you haven't seen that video, go find that video. And it's about a 20-minute rant that he goes on talking about the cons of trading. The name of the video is Everything You Need to Day Trade by Oliver Velez. And his rant starts about the 18-minute mark, where he has the cons of trading. And it's a great speech. But since I've had so many requests, or we had so many conversations about entry, I think it's important that, we spend a little time discussing entries, and I'm going to discuss how I enter a trade. And if Andrew or Kim or whoever else, it has a way of entry, they can discuss the way they enter a trade, and that way we'll get this out of the way. Okay, it never changes for me, and I consider myself a smart money trader, an ICT trader. Listening to his videos, you get the bearish order block or displacement, right? And we call this displacement because we have a red candle that broke the low of the green candle in this case. If I drop 2 time frames down, I can see the displacement, which means there's imbalance as price moves and breaks the low. So now I just need to find the imbalance that is in the discount or in the premium for a sell. Price needs to buy back up to the premium. So if I find the displacement that's in the premium area, that's where I want to be able to catch my sell trade. And all these are fancy words, but it's very simple for me. On the 4-hour time frame, when I see this bearish order block, I throw my Fibonacci on it. I mark up my 50% to the 61.8, and I put a line or a ray at my 78. Then when I drop my 2 time frames down, I look for the displacement of the imbalances that are in my zone. Those are the imbalances that I want to enter the trade from. Now, ideally, I want to enter from the 50% of the highest imbalance. Doesn't mean that price has to come here. A lot of times, price is just going to tap that zone and keep going. That's cool. You're going to miss out on some trade opportunities. As a trader, you have to be okay with missing some opportunities. Sometimes missing opportunities is the best thing that can happen to you as a trader. So if you miss that opportunity, on to the next. It's the very reason why I like to pick 3 different trade ideas, because sometimes a trade idea will do the exact thing that I think, and then other times it'll do something totally different. I don't get an entry. Oh, well, at least I didn't lose money. So hopefully that's the approach that you will develop as a trader as well. If you fight to get into a trade that you probably shouldn't be in, you're going to get a bad entry. And bad entries oftentimes lead to bad experiences. So that's exactly how I enter this trade. All right, I'm going to give you this sauce on a higher time frame, because I want to talk about a USD JPY trade, and I think it's fitting because if those of you who watched my little video from last week, I was on USD JPY even though we didn't have a bearish order block. I saw that we had wicked the highs. I saw we needed to sell, right? I said we needed to at least sell to this imbalance. Dang, I'm good. I said we needed to sell to this imbalance, and we did. But guess what? We did all that, and it never gave me an entry. This is exactly what I thought would happen. I thought that this trade would sell down into this imbalance at least, and it did. So even though the trade did everything that I thought it would do, right? This is what the market looked like coming into the week, and I did my little fib. Now, I knew that this might be a far-fetched idea because, as you can see, we already wicked into the zone. Price had already wicked into that zone. So I kind of had a feeling that this might not wick into the zone again. It might not give us a second opportunity to enter the trade. But I wasn't willing to just hop in and sell stop this thing like many of you may have done. Okay. So there's another opportunity to enter the trade. For me, I did not take this opportunity, but I did call it out. I didn't take this opportunity because I didn't want the market to roll back, right? If you use a higher lot size on trades and you get a bad entry, again, bad entries lead to bad experiences. Now, price did roll back up. Price did roll back up. Your first entry could have been 1,700. I'm not taking that. These entries are good entries, right? So if you could have got this 0.5, this 0.5 entry, right? It would have been a hard sell for most of us because I trade London session, but I'm not staying up all night, waiting to see if a price is coming back in my area. And I don't need to set a limit because I was already in a trade by Tuesday. But price eventually came back up into the into your level at 5 a.m. New York time. So if you had taken this trade, or if you had waited on this trade, or if you had set a limit order, you would have been tapped into this trade at this point. Not me. I didn't get in the trade. And then this trade takes off and shows the heck out, right? So if you're trading the little 100 pip joint, you got 318 of them joints. Now, if we go back to the higher time frame, you're going to see we traded right into that imbalance, right below that structure. We just broke structure. This was our change of character on a higher time frame. This is a change of character for me. It might not be a change of character for my girl Kim, but for me, this is a change of character or a market structure shift, right? So it traded into that imbalance on that weekly. If we go back to the weekly, you're going to see we traded into that imbalance, and now it should be going up to this area to let us in for the bigger move down south. If I drop back to this weekly, we created a bearish order block. There's my change of character. Everything is perfect for that trade. Now, if you are waiting to enter that trade manually, it happened at 5 in the morning, which is, most of us, even those of us who trade London, don't wait until 5 a.m. to enter into a trade. So the only way that I would have been able to catch this trade, or you too probably, if you would have just set a limit order. And that's the second way that you can enter a trade. I know some traders who only enter trades based on limit orders. They don't wait for the kill zone times and look for trade setups. They put a limit order, they put a stop loss, they put a take profit, and they're hands off. There's absolutely nothing wrong with entering a trade that way. So when you ask me about an entry technique, I'm confused because I think we've all discussed that before. It might not be your comfort area, or you might not be comfortable doing that. And all I can do is suggest that you get better with your analysis. But you're not going to be guaranteed to win. Many times you're going to set a limit order and you're going to get ran through like a hot knife through butter. But those run-throughs, those losses, like Oliver Velez was saying, is going to help you get better with your analysis. It's going to help you pay attention to your imbalances, especially the ones that run through structure. And you're going to say, okay, the market is going to react here. So if I take this trade, I need to be able to get out the trade, in this imbalance. And you're going to say, hey, man, I know this trade should come to the consequent encroachment, but since I'm going against the grade, I need to get out earlier. I need to get my 100 pips and get out of the market. So this trade was a win. It wasn't a win for me, but it was a win for somebody if they had just did the analysis and set a limit order, right? You could have limited order into this trade. Okay, I'm just going to keep on going up in time frames because, I think this is very important. And it doesn't matter who you are or when you're doing your analysis. if you're doing your analysis and you're basing your trade setup on your analysis, you know, uh, you set it and you forget it. You know, you set it and you let it go based on your analysis because it's not going to change just because you're the one that's doing the analysis. Oh, it doesn't work because I'm doing the analysis. No, you're doing your analysis and you're taking trades based on how you learn the market structure and the trades actually work, man. Like I don't understand y'all sometimes. You think just because you're doing the analysis or you taking the trade, it ain't gonna work. If you did this analysis on this monthly time frame, granted, UJ it's a million pips in here, right? But if you did it on the monthly and you dropped yourself down 2 time frames, so not the weekly, but the daily. If you had dropped yourself down to the daily time frame, you would have said, hey man, there is an imbalance here, right? There's trend line liquidity. You know, so me personally, I would have wanted to enter probably at the 78 because of this imbalance, but more importantly, this trend line liquidity. I wouldn't have wanted to enter a trade, a limit order, and then cover all this range, you know, in pips. So if I was taking this trade, I would have wanted to enter this trade at my 78, right? That'll save me 247 pips. It's still a lot of imbalance up here, but it is what it is. If you're taking these types of trades as a trader, you know, you understand with pip count, you know, with the pip count that you have to protect. So 185 pips, and I could take this trade to these lows, right? I see an imbalance down here, so I'll keep this TP1 where it is, and I'll go back to my monthly jank. Okay, so this is how I would have wanted to take this trade on the monthly. And you just kind of live with whatever your results were. In this case, this trade comes through. It pushes down first. It ignores our whole area, right? So, oh man, I didn't get in this trade. Well, it doesn't matter, right? This trade is coming back up. Obviously, it's probably going to come to our zone. It's either going to give us an entry, right? An entry in our zone, or it's going to go to our area. Now, notice where this trade stopped the first time. I meant to stop this trade the first time. Notice where this trade stopped. Remember that imbalance that we looked at on that daily? Remember that first imbalance that we talked about right here? Look at that trade tap right into that imbalance and gave you one of them super drops. It gave you a 739 pip payday if you would just set your limit right there. Well, I be goddamn. 739 pips. I be goddamn, man. Okay. Now, price never reached my entry. However, you know, life being what life is, I saw this wick happen last week. And I could take the trade from last week's wick. So even though it didn't give me my optimal entry, I was able to pick up on a signal that was happened in my zone that I could have took that trade from. Y'all tracking? Anybody lost? Okay. That was from the 1 month. I'm gonna do it again. I'm gonna do it again. I'm gonna do it again. All right, this is a 2 month chart, right? And you know, I'm gonna take it up one more after this. So just bear with me, y'all. Bear with me. Burr with your boy. All right, 2 months chart. This candle, of course, happened end of August. End of August, price closed here, right? I mark up my zone. If I drop 2 time frames down to the weekly, let me see if I find a little imbalancio. I don't really see any imbalancio. Let me go to the daily. Drop it down one more again. Okay, so again, there's my imbalance on a daily. And no, that's not an imbalance. So there's imbalance here on the daily that you can take a trade from, and there's relative equal highs here. So if you're taking this trade on the from the 2-month signal, because it gave you a signal on all of them there. If you're taking it from this high and you're protecting your 78, where you get 200 and some pips, and we just trade it back to this low. Let's just play it out. Let me go to the weekly so I can get us fur. Okay, when this thing went down, we probably could have took this trade a little bit further, but who gives a crap, man? I just want to see if this thing. Okay, so we would have been in this trade. We would have been out of that trade. We'd have lost that trade. Okay, so in this 2-month chart, it comes right to your high imbalance. So your high imbalance on the 2-month would have given you the trade, the better trade idea. So however you would have picked up, even if you had lost that trade, I mean 200 pips is a heck of a loss. But if you would have lost that 200 pip trade, it would have went to your imbalance and gave you a second opportunity where you could have played and got your money back. Because from this point, from this imbalance on your 2-month, I would just trade it to equal lows, right? Because this push down gave you your breakup structure, your market structure shift, however you want to look at it, and for me, and I get it, everybody doesn't see this the same way, but to me, this is the your line of demarcation down here. And if I put my line on this low, we broke. So for me, this is where we coming, bro. Like this is going to be the bottom. And I don't want to argue with y'all. I just want y'all to trade it the way y'all trade it. But this is to me where this price is heading. Now it's going to be some rejects. Like we got a reject here. Y'all see this imbalance? We're going to get another reject there, but price will eventually end up down yonder way. Based on the structure. You can see a bearish weekly order block. It's going to give you an entry. You do your analysis on the entry. Your entries can be manual or they can be based on imbalance, right? And how you position your entries, you're going to win or lose based off of those. It's okay if you lose. It's nothing. I mean, we're all going to lose from trades. If you lose, you go and you look and you understand, why did I lose this trade? Okay, I should have selected this. Or you can be the type of person to say, hey, you know what? I'm always going to select the highest imbalance, right? And if it doesn't give me that entry, I'm not interested in trading. You can do that. There's nothing wrong with that. In this particular situation, you had a zone. You would have taken your entry. It went past your 78. You lost. Man, take that L on the cheek. You get a new opportunity to enter the trade. You can say, hey, man, this didn't work out because it went higher than my 78, went to my 88. Well, there's an imbalance there. So, you understand why you lost the trade. There's nothing wrong with taking, I call good losses. That's in my opinion, a good loss. So does anybody have any question on how I personally enter trades? Is it perfect? Heck no, it's not perfect. But it's just the way it is. Anybody? Any questions? Nobody. That's cool. Hey,
I got a question.
what's your question?
What are your signs to enter a trade? What are the three things you need to enter a trade?
The three things. So first of all, I don't necessarily need three things to enter a trade.
You told me I need
But
three things.
wait. I know you're going there, and that's not what I told you. What I said was there are three things that I look for a great trade setup. That's different. The setup is what you need. That's how I know a good trade is going to happen. Okay? Do you understand the difference?
Yes.
Okay. So let's talk about that. Three things that I need for a great trade setup is an order block, an imbalance, and a break of structure. So in this case, I got my order block up here. I have an imbalance from here to here, and we break structure. We break structure here. We break these lows, like price just goes down. So I know when price comes back up, I'm going to have a good trade setup. And price comes back up, it reacts off the imbalance that breaks the structure, and now it's on and popping. Now, whether you take this trade and you believe that it's going to the bottom, you get paid. Some of y'all only take the trade and get in and out because you don't really believe that it's going to the bottom because you're in the trade setup. Like, it's 1,000 different videos that show you that once the trade breaks structure, it gives you the market structure shift and pulls back. Well, dang it, that's where the trade is going. So this trade already showed us where it's going. The entry was given. I missed the entry. Who said, why don't I enter at the order block? iPad. Who are you, iPad? Please.
I did, Todd.
Huh?
I did. I asked, why don't you enter at the order?
Who am I speaking to?
Aniede.
Okay. Why don't I enter at the order block? So let me show you where the order block is for you Kim zone to zone traders. This right here is the order block for me, right? Would that be an order block for you? Easy E?
Yes.
Okay. You see how that trade, it ain't talking about that. It ain't studying that order block. That trade came to that imbalance though. So listen, I know some trades are going to come all the way back, but I'm going to show you and this just goes back to who you learn from, right? This ICT mentorship. I know y'all get tired of me, Brett.
Forex trade because this.
But I want you to see something. So you see how price comes up, takes out these highs?
Yeah.
Comes down, takes out that low. Then price goes, taps into that zone and bounces. You see how we come down and we take out this low right here?
Yeah.
So where would your order block be? Would your order block be right here?
Yes.
And you would have missed this trade because it came into the imbalance, but it didn't go to that order block. And then it fell.
So you don't take it at the order block because most times it doesn't get back to the order block?
Well, the way I trade,
okay,
I trade based on the imbalance. The order block is cool. The order block lets me know that there are orders that are accumulated in that area. The imbalance lets me know that we're serious about going that direction. That when price trades back to that imbalance, that it's on and popping. Does that make sense? So here's the issue. You learned to trade with Kim, correct?
Yes.
Okay. If you learn to trade with Kim, I would suggest you stick to Kim's method because our triggers are different. You understand what I'm saying?
What do you mean by triggers?
Okay, what triggers a trade idea for Kim is going to be different from what triggers a trade idea from me.
Okay.
I'm not saying that Kim won't be able to get in the trade, because that's an absolute lie. She will be able to get into a trade. So if you see this order block down here, that's a zone. See how it taps in? Kim is in that trade. She runs it all the way up.
Yes.
It's Kim's way to get into a trade is totally different. Whereas I could have caught this trade at this imbalance. You see this order block right here?
Yes.
Kim is going to catch this trade at this order block, because tomorrow it's going to buy up, and we're already at the zone, right? If you'd have had this order block right here, you're going to put a zone right here, right?
Yes.
Well, it's going to buy up first. And I'm going to show you, y'all bear with me. I'm going to show you that this is buying up. You see the imbalance on this 4 hour? You see how this is buying up?
Mm-hmm.
So this is where you and Kim are going to catch this trade. And it's going to bounce down. Again, you got to break a structure right here. And you got imbalance. You got imbalance. This trade is going to buy up to one of these imbalances, which is well within your zone. And you and Kim are going to be in this trade selling. You see what I'm saying?
Yeah, I see it.
So all I'm trying to tell you is whoever you're learning to trade from,
Mm-hmm.
it's good that you learn that method.
Mm-hmm.
When you get more experience trading, then you're going to see little things. You'll say, you know what? Oh, I could have entered there in that imbalance. It's not coming back to this zone, but it created a new zone. And now you're going to be in the trade. So you know how Kim always, or Kim many times will say, I'm not entering right there. I'm entering later.
Yes.
Confirmation. Right?
Yes.
Kim would have said, I'm not entering right there. I want confirmation. Here's your confirmation. Your confirmation is now you have a zone, and there's your tap, and it's going to keep pushing. It's not right or it's not wrong. It's a choice on how you want to trade. Many times I'm going to try to enter here, and it'll pull back and it'll violate me. Well, Kim ain't going to get violated because she didn't enter right there. You see what I'm saying?
Yes.
So it's styles. Styles make trades. The way that Kim trades, her trade idea will be triggered in a different method than my trade idea. And there's nothing wrong with either. You just need to be solid in one of those. Does that make sense?
Yes, it does.
Okay.
Thank you, Todd.
No problem. Hey, Andrew.
Yo,
Do you want to talk about the way you enter a trade, or do you not? I mean, I don't want to put y'all on the spot, man. But I know I wanted to talk about this, and I didn't reach out to you or Kim or anybody else who has an entry method. But you know, if you want to talk about your entry method, that would be awesome.
It's fine. I can just talk a little bit, you know.
Well, the only reason I kind of put you on the spot, Andrew, is because I know you don't mind talking.
No, for me, I'm just like sleeping.
You say you just what?
I always wake up early, like 6 or something, just to walk, do some exercise or something.
Oh, you exercising?
Yeah.
Oh, my bad, man. So, you can make your own video or whatever if you want. Does anybody else have an entry method that they want to discuss? Terry, anybody that have an entry method? Kimmy, you on the call, Kimmy?
I usually do kind of like what Kim do, or I look for that 50% or that 60%.
Terry, tell them what you really do. I done told Terry he needed to teach on. I told Terry he needed to teach.
Hey, hey, Kim, I ain't trying to start no.
You see that, huh, Ty? You see that, huh, Ty?
I know, Hey, Kim, you want to talk about your entry method?
No, you talked about it. My entry method is
Well, listen,
once I get, I'll talk about it. I have no problem
yeah,
talking about it.
okay.
So I enter on an institutional candle or an area of supply or demand, and
But
it's
you want to show the chart, or are you not in a good spot?
oh wait a minute, give me a second because I'm on my phone. Hold on a second.
Terry be sleeping on everybody. Kim, get him.
Mhm, mhm.
Yes,
I
indeed. You know
messaged
what I
him
got to
the
go
other
through, huh,
day and
Ty?
told him he
Hey,
needed to be teaching.
I don't understand why y'all. Oh, you told Terry they're gonna make you teach, bro.
Mm-hmm.
I see that. I see that, Ty. Well, I'll show you something after. I'm gonna see if I can get on it with my laptop.
Mm-hmm. Hold on a second. Do. Zoom link. Let me get out here. All right, so let me go to the 4 hour. And let me go back over to where was I just oh, right here. No, that wasn't it. It was over here. Okay. So y'all know I'm always looking at market structure first. That's first and foremost. So I identify my break of structure. I identify my swing lows. And as they are going up, I mark them as they go. Right? So soon as I get a break of structure, now my Todd is usually break of structure in here, or he's waiting for, and let me zoom in, or he's waiting for I guess and this is Todd's strategy, right? So once Todd gets this sweep, or this is ICT strategy. So once Todd gets this sweep, he then is expecting the sell, which I have no problem with that, especially you got to sweep and then you got a 4 hour bear shorter block. However, my thought process is based on this structure here. This is my structure. So once I see this structure break, then I go down to like my 1 hour. I go down to my 1 hour and I mark up. And let me just be clear. There's internal structure here. This is an internal break of structure here, right? And then there's this internal structure here. So I can get with that. I can see that's where Todd would see his break, right? Or he might have saw it up in here somewhere.
Can you
so-
go back to the 4 hour, please?
Give me just a second. So once this internal break, although this is a higher time frame structure right here, once this internal break happened, then I'm looking for my institutional candle, and it is and you can, because you got to cover this wick right here. So if you want to use that candle, but it's usually the last up candle before the down move. So this would definitely be my last up candle before the down move. So once price broke this structure, this was the last up candle before the down move. So that would be my entry. That's 19 pips I definitely would have done 20 or even 25. 30 is probably the best stop loss to have. 20 can be tight, but GJ normally, and it still would have wicked it out, but or it would have hedged me out. It would have hedged me into a trade, right? But as soon as this structure started breaking to the downside, I would be expecting another move back up. Every time you get a break of structure, you should be expecting a pull back up. That is why I set limits. I don't like stops, because when you're doing a stop, if you're doing a sell stop for a sell, you're selling at the low. If you're doing a buy stop at the buy, you're buying at the high, which was not how I was taught to trade in the beginning. I was taught to sell from the high and buy from the low. So once I get a break of structure, I mark up my institutional candle or my supply zone. And like I said, I would have hedged this over above here and a few pips above. But as you can see, it would have gotten me in, and then I would have had a hedge selling. I would have had a buy hedge selling plus my entry for the sell to sell down. So I would have had two entries in. Does that make sense? Did I say that?
That makes sense, but I got a quick question for you.
Uh-huh.
So when would you know to get out of your hedge when you realize it's going in your direction?
I'm going to stay in the hedge until because I'm looking at structure, right? So even if it breaks this, even though it broke this low and then it broke this low, I know that price is coming back up. I know that price, because once it broke this structure here, my next supply zone is here. Okay. So I know that price is going to pull back somewhere up there. That's when I would get out the hedge, the buy hedge.
Gotcha. That makes sense.
So once price came here, like I said, I'm always looking for confirmation. If I'm looking at structure, this is my structure here. My structure, hold on, let me turn this off. My structure here, right? Because nothing broke past this high. If I had a closed candle above this high, then this would be my structure. And yes, this is a why is my door? Hold on a second, y'all. Hold on a second, y'all. I'm getting a delivery. Hold on a second. Pause the recording time. Pause the record. Oh man. Oh, okay, here we go. So the hedge would have been here at the 20 pips. This would have been the hedge.
Okay.
This would have
Yep.
activated my hedge. This
Yep.
hedge right here. So
But I thought you had to wait until so it picked up your hedge like immediately. Like it picked up your limit and your hedge all in one sweep with that one
correct.
candle. Oh,
Correct.
okay.
Correct.
Okay.
So I would have had a buy and a sell running at the same time.
Yeah, no, tracking.
I have
Thank
a
you.
question, please.
Yes, sir.
So, hedging, right?
Mm-hmm.
What is the point of hedging the trade? Is it because you don't know the direction of the market, or what is the point of hedging the trade?
Are you serious? The point of
Because for
hedging your
me,
trade.
if I will hedge my trade, right, that means if I'm buying, just for example, gold, right? I've been on buy for like what, a week? So the pullbacks, I'm hedging the pullbacks. I'm selling it back down for me to get more entry.
To
That
make
means
money, yeah.
I'm going to get out from my, like from the sell, still leave my buys, right? Then get in more buys. So what is the hedging? You knew this
So-
price was going to sell. You put a buy
No,
limit
you don't
at the
know
top
that
of the market.
you,
What
you
was
really
the point?
don't know that price is going to sell because this is the overall swing right here, right? So this internal swing could have definitely just tapped into this demand zone and could have kept buying up.
I think that's over 100 pips though, Cam. How many pips is that?
Which one?
That sell down to your demand zone.
Oh, the sell. Oh, yeah.
Yeah.
The sell. Yeah.
Come on, man. Yeah.
126 pips.
I just try to be realistic.
Yeah.
But you said that you were waiting for that structure break below. You saw that one, or no? Which one?
This was the structure. This was the higher time frame structure. This was
Oh, okay. I
internal.
didn't see the other line. I'm
This
sorry.
is internal structure right here.
Mhm.
Excuse me. This is internal structure. So this could have, yes, come back to this zone and could have kept buying.
Yes, okay.
So and which it did exactly that, right? So it pulled back into this zone, wicked into this demand zone, and pushed back up to these highs. It did exactly that. And then it started to sell. So, Andrew, the purpose of a hedge is so that you don't have to set a stop. Instead of setting a stop loss, you just set a hedge. Because 9 times, y'all, hold on a second. Oh, shoot, that was my dad. 9 times out of 10, your hedge should not get picked up if you're trading the right way.
Mm-hmm.
But sometimes you'll be part of a liquidity sweep. You're right. A lot of times it won't get picked up, but sometimes you'll get liquidated right there. I can see how that hedge would have picked up off of a liquidity sweep, but my issue is how far are you taking these trades? I think most people in this group don't hold trades very long. Like, what are y'all average time holding trades?
I don't know, Todd. We trying to get professional like you, and then we can hold them on.
I'm just asking because if I think trading is easier when you take a more realistic approach for who you are and where you are in the trade game. Like, I don't need to try to hold a 700 pip trade if I've never held a 200 pip trade. Does that make sense?
That's true.
I mean, holding a trade also depends on where your TP is, right? That is based on the structure.
It should be. Do
But
you think that's happening,
Andrew? It's also up to you, right? For you to know, like, okay, I think it's time for me to get out of the market, like, depending on what the market is doing. And if you know, okay, the market is going to go your direction either ways, it doesn't matter how the market is behaving, then you can decide to hold it for long, or it's just up to you as a trader too,
So I wanted to just kind of go to a higher time frame or just show if, and I know some people say, don't look to the left. You don't necessarily need to look to the left, but For me, I know I need to look to the left, okay? I need to understand higher time frame structure. And this for me was higher time frame structure.
Okay, based on everything we've been like discussing right here on this Zoom. So, and Ty was like, you should show like your way of entry, right? So let's just make this one easier. Can you squeeze back again a little bit? Not like, so back to the yes. Yeah, but more, no. Yes, like this. So this high, right? I don't know if you trade ICT or just based on what you like you trade. But like I remember when price was moving up, we were always on Zoom anyway. So I was also saying like when price take out this high, GJ is going to sell. So let's just think about right now, price took out this high and we were expecting sell. You were talking about the hedge. So I don't know. Let's forget about the hedging, just focus on like entry. So we knew price is going to sweep this high and start selling back down because of this structure right here. So we need to
But
come
this
back
is
to
the
what-
thing. But this is the thing.
Okay.
So yes, price did sweep this high. And like I said, it is very important to know the actual structure, right? This was the actual structural move. However, to take out this high means price can come into this imbalance here. Like you got to look and analyze the full picture. Price could have come, and I think on the daily it was a
we are on the same page, right? So what I'm trying to say is that you have to make it simple for them. So we have a key level. We should call it a key level. So what do you do if price get to your key level? That's what you have to talk about. Because basically, if price get to my key level, then we were buying, right? We bought into that key level. So my interest now is for me to see if I will get a reaction for me to sell this price back down. So if you get a reaction, or what kind of reaction do you want to see for you to be able to get into the sell, or what kind of reaction you want to see around there for you to know if this market is going to continue buying? Basically, this is what we are just here to talk about.
I get you, and I just stated that yes, although this did take out this high, this was still structure. And like I said, once you mark up your based on this structure here, you mark up your demand zone. Well, I mark up my demand zone. And price, and then I don't mark it up. I mark it up on the 4-hour, but then I go down in time frame to narrow my risk, right? So this was the last down candle before the up move. So price tapped into that, and target definitely would have been that TP, which was target definitely would have been this high, right? Which was, how many pips was that? 142 pips. So, and like I said, it did just that. So for me, whether it came up here or not, it's still bullish until it breaks this zone for me. So now that I see that this this swing has shifted, now I can go mark up my next supply zone, which I say is the last up candle before the down move, and wait for price to come back there. And yes, you can buy it back up, but because you never know how far price is going to buy up. This could have just gone to the 50% and then started selling. Like, you just don't know. One, because here's another swing.
Kim, you know I was about to say, I know Kim ain't talking about buying it back up.
Look, I'm the patient trader. I'm the patient trader.
Oh my God.
So I'm marking up this zone here, and then price can come here and either get me in and then take me out the rest to these target the next low. This was the last low, so that would be the target.
So Kim,
Hmm.
you saw me pointing out that one little area right here? This one,
Which one?
this one.
Where I don't see where you're oh, uh-huh.
That one.
Uh-huh.
Because you said that since we were still bullish, it hit your
Hit the supply demand zone. Mm-hmm.
okay. So can you zoom into that? Would
Sure.
you have bought it from right there?
Yeah, absolutely. Because it broke
What did
structure
you see when
here.
it bought? Like what
So
was your
no,
buy? I mean, your
once it broke structure here, I mark up my demand zone and set my limit. That's just it. I'm not waiting to see nothing.
okay, so you set a limit right here because got it.
That means there will be no confirmation for you to buy this market up.
Mhm.
You said there would be no confirmation?
Yeah, that's all. Is it not what you're asking, Effie?
I was just
Yeah,
gonna
that's
say,
what she's
I
asking.
wanted to know what is
I wanted to know what I saw in here. Now, if I wanted to wait for price to get here, let me
Mhm.
remove this I'm gonna go, you can go down to your 15-minute or 5-minute or whatever zone you want, right? Price tapped into your zone, did not break this low. Once it gave you this order block, once it broke structure, you mark up. Then the next zone is the institutional candle, the last down candle before the up move. You could have caught it here. As you can
So
see,
where is the structure that it broke?
first the premise of the move was it broke structure here. It pulled back to the demand zone. So once
Okay,
it
so
did not break this low and it gave you this order block, you can mark up your institutional candle and wait for price to come to your zone. So now that, and let me delete that. So now that price has given you an order block showing you bullish momentum, you can then mark up this last zone. Let's see, wherever it is, wherever that low is, right here. That's 20 pips. And then take it to your high. And your high is right here.
Okay.
okay, so now that
That's
means
130 pips.
okay.
Thank
So
you.
my
You're
question
welcome.
now is that so that means every other block we just have to wait for price to get there and take an
No.
entry.
You're in bullish. It's bullish until for me, it's bullish until it breaks this swing low. So every time I get a break of structure, and I think I've beat the dead horse on this one.
But,
I look for my
no,
the supply or demand. Like that's just that's my strat. That's how I trade. Okay.
but
So
the question of my question right here is that you know that price is bullish. So that means once price get to your demand, which is your bullish order block, you want to buy, right? That is basically what you are saying right now. So
mhm.
what about the structure that we broke down? There was like that was like a bullish order block. That was a demand zone, right?
You're missing my point. I
Okay.
don't care about this right here. I've already set my limit. I'm already in a trade. I'm saying for anybody that missed that, okay, there was a bullish order block. This is the next demand zone. So you can get in on the next demand zone. I'm
And
already in a trade.
yeah, and I understand, right? Like what you explain right here is good, right? But before you marked out this demand zone, you want to see a structure break in this lower time frame, right? I'm asking, where is the structure? Because
I'm
the
not
last structure that moved into that area was from that high, right? And
This
it
is
wasn't
this
broken
is
before
this
you
is my
talk about
this
the
is
entry.
this is my structure here. That's
Overall structure,
here.
right? Yes.
Whatever happens over here, once I set my limit from my 1 hour, I don't go to the 15. I mark up my zones on the 1 hour, 4 hour and 1 hour. Okay. And then what happens after that is beyond me. Okay. So
So
once
there is no
I had-
confirmation for you to take a trade, basically.
the information was right here for me to take the trade. The information, this was the last push up. So I'm expecting price to pull back here. I've set my limit. It's either going to work or it's not. That's all I could that's all I got for you.
Okay,
That's
hold
all I
on,
got.
please. No, we are on the same page. I'm just trying to make like a lot of people understand like what you are saying. So, but why did you mark out this low right here? Why not this low? It's just what I'm seeing because I asked you
Because
to go
this
back to
was
the
the
4
break
hour.
of structure. This is the break of structure.
Yes, I
Everything from
see.
this
That was the
line
break
right
of
here
structure.
to the lowest point is this is the protected low right here. This is a protected low. So everything
Yes.
from that break to the protected low is part of the swing.
So that's what I'm asking, right? This is a protected low. Fine. This low right here, what kind of low is this? That's what I'm asking. I ask you to go back to the 4 hour
This is
because
just the demand zone. So for when I'm looking for a demand zone, y'all, I'm looking for an imbalance and an order block. That's what I look for
So
a
Kim,
demand
you say
zone.
you're looking for an order block, an imbalance, and a break of structure?
I'm looking.
That's your
I'm
key?
not even looking for the break of structure.
Oh, it's there. It's gonna be there every time. It's gonna be there every time.
No, I'm saying once I get this break of structure, right? This one up here,
I know, but
I go
I'm
look
just
for my demand zone, and that's what I mark up. It's either going to work out or it's not.
that
And
means okay.
then I will trade
Let's
accordingly the way it works out.
well, I'm with you,
okay.
Kim. I was just reiterating this because this is what I tell them all the time. On this
But
setup,
basically, right now, yes,
you have everything you need.
her entry is aggressive entry. There is no confirmation
We're right here.
because
The confirmation
this
was right
oh,
here.
no,
When it-
that is not a confirmation. That
This
is
is
No,
just the
this
last.
is the
my
confirmation right
the
here.
confirmation is it did not break this low and it broke this high. This is my confirmation. That means I'm still, in my mind, I'm still bullish. Okay? In my
The
mind,
thing
I'm
is,
still bullish.
I don't know if any other person can see this chart, right? This was the last demand zone that moved higher. So you want price to return back there to move higher. But
Mhm.
what is telling you that, what is the odd of price moving here to move higher without you seeing confirmation? Don't you think price can break below this low?
I don't need confirmation. I'm setting my limit and I'm just
That
like
is what we are saying. So you have to let them know that you don't have a confirmation
no,
for you to
that
take a
is my
trade.
confirmation. Confirmation is this broke structure. I look for my demand zone, and that's all the confirmation I need to set my limit. That's it. I'm not gonna make it more difficult than that.
That's it. That's all.
That's
Kim,
it, and that's
Kim,
all.
I didn't realize you were so aggressive, Kim.
Okay,
Look,
because this is aggressive entry, first of all. And again, most of the Zoom, when we are talking, you say when price gets to your what? Your demand area, you want to see a break of structure to the upside. But where is the break of structure
yeah,
right here?
if you're
This is what I'm
sitting and
saying.
look, if you're sitting and watching the charts all day, yeah, you can do that. You can sit there. Matter of fact, move your little squiggly lines.
I'm not the one that put all
Move
this
your
on.
little
No, not
squiggly lines.
me.
Yeah, if you want to sit on the chart and watch the charts all day, hold on, where is it?
But Kim, you had already said you waiting for it to hit your zone and you drop down to the 1 hour.
No. I marked up my zone on the 1 hour.
Oh, okay.
I'm done. Like yesterday when I posted, oh shoot, it won't go to the 5 minute. Yesterday when I posted, I haven't even looked at the charts until now, till today. So, and let me find one that that's closer to price right now and drop to the 5 minute. Okay. So, let me
Okay,
find a
okay,
good
Kim, can you
example.
use the current price action right now? Let's go to the current price action, right?
Mm-hmm.
Okay, so let's say right here was the last demand that broke and supply that broke this structure. So you
That's
want price
right.
to come
No,
here
no,
and
no,
sell
no.
down.
This is a perfect example. Perfect
Okay,
example. So price
okay.
broke structure here,
Uh-huh.
right?
Yes.
Set my institutional candle. This was
Mm-hmm.
the last green candle before the up move. It tapped in and sold down. Now,
Okay.
of course, I would have set this as my TP right here, right? But it did not go that far. Okay? It didn't go that far. So either it come back and stop me out or whatever it's going to do. But now that price has, let me just delete all this. Now that price has, this is our breakup structure right here. Like you just making it difficult.
I'm
You
not making it.
Get him, Jeff.
People
and
are
you got
asking
this,
about
and you got
entry
this,
method, right? So
and
I
that's
want
what
to
I'm
make sure they understood like what you are
so
explaining to them,
wait,
you know.
so hold
And
on.
you guys have to ask questions.
Hold on, Andrew, because
I'm not going to ask questions for you guys.
my chart is up here because I'm explaining my entry method at this moment. Okay. So this is once we had this break of structure, this was the swing high. Price did not
Mhm.
break this, and this was the swing low market structure, y'all. I'm trying to tell y'all. Market structure. So once price did not break this low, and has come and break this high. So honestly, I gave that trade yesterday only because I saw this imbalance right here, but I'm gonna do the same thing. I'm gonna go mark up my institutional candle. I am going to next week, I am going to set my limit and I'm going to let it do what it's going to do. That's 40 pips. That's too much for me. That's 30 pips. I'll take it. So, and then I am going to go up to maybe my 4 hour. And because higher time frame, this was my breakup structure. So my supply zone is here. So I am going to take my profit here. And that's it. That's it. That's all. And then I might even set a limit to sell back down from here to this low because price is still bearish. Price is still bearish. So I'm really expecting price to come down to, there's probably a demand zone somewhere in the wicks of this zone here. Let's go down to the 4 hour. Let's go down to the 1 hour. And here we go. This is my demand zone. So I can then take if I want to set a limit from there, I can set a limit from there. Or if you want to wait for price to show you what it's going to do, you can do that. So based on waiting for price to show you what it's going to do, right?
Mhm.
Let me find, and I'm gonna take this down to here. That's what I'm gonna do. Okay. Based on waiting for price to show you what it wants to do. And I know I'm just trying to find the I think this is where I was before. Wasn't this where I was doing it before? I can't, yeah, it was because that was the high. So let me find something different. Once price breaks, and a lot of times I may not even get in a trade because I'm waiting for price to, like right here. This is the breakup structure right here. So everything from this point up to there is my swing. So I would definitely be looking for price to come back up here to sell. It did not come back up there. Okay, so now you have the next break of structure. This is the next break of structure right here. Hold on, let me take off this little magnet. So now this is the next break of structure right here, right? So everything from here to this high, I'm looking for price to come back into the zone. It didn't come back. So you just got, it's just going to be what it's going to be. Now, it did come back to that zone, but I wouldn't have been expecting price to come back to there. Once price starts breaking more structure, okay, then I'm deleting these. I'm deleting those limits. Once price breaks structure, I'm expecting price to come into that zone and start selling. But as you can see, price then broke another level of structure. So guess what? I'm deleting that because I know once price starts breaking this structure, then we have a market structure shift. And I did not mark this at, wait a minute, hold on. What am I on the 1 hour? And what I look for when I'm looking for a break of structure, and if I have to zoom in 20 times, see that for me on the 1 hour, price did not break that structure. So I don't consider this the swing high. If you go down, of course, if you go down in the 5 minute, 1 minute, but my strategy, I want to see a break of structure on the 1 hour or the 4 hour. I need to see candle close below the low on the 1 hour or 4 hour. If I don't get that, then price is either coming back up here to pull back and then continue buying, or it's just going to keep buying. So once price broke this structure, right? I always try to look for it on my higher time frame first. Once price broke this structure on the 4 hour, this was my institutional candle. This was the last candle that I would have been looking for price. But price has to break the structure first. Like this pulled back into it, but that didn't mean anything to me because price broke this structure. Now, this was a violated order block, 4 hour, right? So if you're using the violated order block, it broke the violated order block, pulled back into that order block, and then left the building. So once price broke this high and never pulled back to my zone, and then started breaking these next internal, this was a break, right? This was my institutional candle. Okay. Now, this was my break here. So now this is my institutional candle. Price never came back. Price broke structure, right? So now I'm deleting that. Once price breaks this structure, my institutional candle, it tapped in and it's gone. So then my next break is here. So my institutional candle, well, I would have marked up this right here, but this was the imbalance and the order block. I personally would not want it because this is kind of in the middle, but that's the institutional candle. Okay.
I got a question, Kim.
Yes.
Are you adding positions at all of these spots that you're highlighting right now? All of these zones, institutional candles?
This is stacking. Yes.
Okay.
So once price broke here and I marked up this, because I would have marked up this candle here. Okay. But once it broke, it didn't come back there. And I'm okay with that. I just didn't get a trade. Okay. So now that price broke this right here, then this is my institutional candle that price pulled back to, but of course I'm expecting it to buy to this high. I mean, we can't win them all, okay? And especially since this was equal highs, right? It didn't pull back, it didn't come back and take out this high. So it's a trade that's either picked up my hedge or stopped me out, whichever one I decide to do that day. Okay, so now that price has, let me remove my drawings, because this was my swing low. Now that price has broken my low, I'm going to go and mark up my last up candle before the down move. And yes, price is still selling, but when it pulls back, it is going to come one or two places. It's going to come, and you know, I'm always looking for the 78 or around the 88. So as of right now, price can pull back to here and I'll be okay. I will be okay with a pullback up to here.
I have a question.
Yes.
Now you see why it's kind of hard for me to teach, because I don't know if I can explain myself that well, like
Well,
you just did. But I can explain how to mark them up, and it's actually perfect.
Hey,
What I'm
Terry.
just saying.
So
Because
Terry,
it's right at 180. It's right at one. I would expect
I
the
was getting
price
ready
to
to
make a
say,
move right around 189
Hey,
or
Terry.
somewhere in that area.
Terry,
So
I
Now,
feel like
what you say, Ty?
I feel like I was in an advanced statistics class.
That's what I'm trying to tell you.
Hey,
I
hey,
don't know if
I don't know what's going on, bro. Hey, man.
shut up, Ty.
All I can say is good luck to you, bro. Like, hey, man, if I got to do all them steps, now I'm going to sleep, bro.
That was not in a bunch of steps. It's the same thing over and over. So Terry trades, and we're gonna get Terry to teach, okay? Terry trades quarter levels, right?
Hey, we asked Kim for our entry method. That's all we asked.
And that's what I gave. I gave. Let me see that. What was that? 198. 198.
You want the levels?
Because Terry did this before. Terry know how to teach.
The level is 190, 192.5, 195, 197.5, and then 200.
Oh, 200.
That's 250 pip intervals.
And what was the one before that? 195.
197,
197.5.
yeah.
197. The only thing with Terry's a scalper. 197.5.
0.5, yeah.
So
And then
once price got
195.
I just went right there. Once price got to 197.5.
There go your reaction right there.
It didn't go to 200. It then came to 197.5, pulled back. Now, this was the break, right? This was a break of structure. So this was your lower time frame or higher time frame institutional candle, right? But it pulled into it without taking out these highs and then broke structure again. So price then broke this swing low. It's the same thing, Terry. It's the same thing. Broke the swing low. Now, I would have been looking for price to pull back to the institutional candle or the last candle before that down move. It didn't come back, but that's okay. I'm okay with that. So that's Terry. Terry, when you gonna teach? You doing Thursdays? Or Terry said he's going to announce ahead of time before he hops on to do quarter levels. That's what Terry said. I just
So
had to
see,
check with
but
Terry.
just to say it, since we talking about it now, the price was at 190. That's like the major level. So I would expect a movement if I'm looking for that buy right around 189 or somewhere in that area. And that's why I would start looking for a bullish impulse.
Right, it is right there.
So now I would take it to at least 192.5 or somewhere in that area. To be safe, maybe 192 to fill that imbalance that's right up there.
192.5. 192.5. And if you look at it, it's structure. It's market structure,
And
right?
it's almost at the 78%, correct?
So you got the break here. You got the last up candle before the down move, right? Which is 192.5. Like it's all the same. It's all the same. It's all the same. It's all the same. So yeah. That is right. Well, that's right, Terry. But
Because it could just go bounce up and down all that time before it's in again. We don't know.
You're right, because now that it broke structure, it could just pull here and sell somewhere. It can come up here and sell some more, or sell at least to take out this low.
You see how you treat your best pupil in your first class?
Boy, you was a headache, man. You gave me a headache. No, but no, that's right. Terry's right. And yeah, Terry's right.
Thank you.
Does anybody have any questions?
Any questions?
I know that was like
I'm
honors
a stop
calculus.
there.
That was honors calculus after our elementary math class with me.
Shut up.
I know everybody's head might be spinning.
Shushy.
Appreciate it, Kim.
Welcome.
So basically the moral of the story is there are a number of ways, different ways that you can enter a trade once you see what you need to see as a trader. You know, depending on how many confirmations you need, you know, or what you see as a valid trade setup. When I first started trading, you know, I learned that you know, if you get a trade set up on the 4 hour, you should drop 2 time frames down to the 15-minute trade, 15-minute time frame to find your entry. And I've just kind of maintained that as I developed, you know, even in smart money concepts. So if I see it on the daily, I'm going to the 1 hour to look for my imbalance that I want that trade to hit and reject from, and then I'm in trade for the move. So hopefully this clears up entry questions, right? I would encourage you to get with people one-on-one. You know, if you really are having an entry issue, if you have an entry issue and you trade like I do, I can clean that up for you very fast. If you have an entry issue and you trade like Kim, you need to go to Kim and allow her to clean it up. If you trade like Andrew, you need to go to Andrew and allow him to clean it up. You're not going to benefit anything if you're trying to trade like me and you have an entry issue and you go to Kim. It's not going to help you. It's going to confuse you. Andrew might be able to clean up an entry at the way I enter, because he also, you know, uses smart money. He just kind of deviated into his flat area and all that good stuff, but it's still based on smart money concepts. But I would encourage you, if you are trading the way I trade, just ask, man. I will help clean up, your entry issues or whatever. But to think that you can go to Newolf, me, Kim, and everybody, you're going to be more confused after that, because depending on how you're trading, 3 of those ways aren't going to make much sense. Only the person that you learn to trade or you trade similar to can give you probably a little bit more comfort in your entries into a trade. All right, do we have any questions over anything that we've covered today? Good folks. Okay, for the people who like to trade the way I do, I posted my little top 3 trades. I kind of detailed those trades. I think this week is important because I only used one trade that had a weekly bearish order block. And I really kind of didn't highlight the weekly bearish order block. But you still can analyze that weekly bearish order block on UJ to find an entry. But I kind of approached that trade from the higher time frame perspective, just so you can kind of see how it all kind of correlates. Some people have expressed to me that they get confused when we switch time frames. So I kind of tried to take the airplane view, land the airplane, started at the 2 month, and just for the edification of people who may not trade or may not see it or understand what I was talking about. I'm gonna land the plane with UJ from the 3 month. All right, from the 3 month coming into January. This was the close of December. All right, for me, I had a bearish order block with a tap in at my 78%. What I wanted to see was the high of the last 3 month candle get ran.
I can't see your screen, Todd.
Well, thank you.
Mhm.
I guess everybody was just gonna listen. That's cool.
Well, I thought you was like kind of wrapping up or something, so that's why I didn't say nothing.
I'll definitely wrap it up. I just want to land the plane with the 3 month time frame, and I want you to see how I correlate these time frames. Not that this is the only way to do it, but this is the way I do it. So I'm just going to give it to you the way I give it to you. You can rewatch this video. If it makes sense, that's cool. If not, I don't know. Good luck to you. So 3 month bearish order block, price tapped in. All right, I have us going bearish. I know we're on top of the moving average, but I think I've spoke exhaustively about the fundamentals changing. So I believe that we're going to get a sell. Even if this does not sell to the bottom like I believe it's going to do, you could just fib this green candle and sell to the halfway point, 50%. But what I wanted to see from this 3 month candle as a smart money trader, the power of 3 says, if you're bearish, you should look for an up move first, and then for the market to turn and burn in your direction. So I would need to see an up move, and then I want to get the real move, and then I want to get a pullback on the 3 month candle. So we got the up move, right? You can see the top wick of this candle. We got the up move. And now I'm looking for the sell. All right, if I drop down to the 2 month time frame, 2 month time frame, I kind of went over as I described my entry method. If you would fib this candle, this price came right into your imbalance, all right, of that 2 month time frame. But the 2 month time frame, we have a bearish order block. We traded back up into our zone, and now it looks like we're getting a rejection in our zone. That's on the 2 month. I can go to the 1 month. Here's a 1 month bearish order block. We traded up into that zone, and we're getting a reject. All right, let's go down to, I'm just going to go to the 2 weeks just for craps and giggles. All right, for craps and giggles, on this 2 week chart, we can see we got a push down. We traded back up. If I fib this, if I fib the down move, price came up to our 78, almost to 88, right? On this 2 week chart, I would classify this as a 2 week bearish order block. What I really like about this this setup is we can see this wick, we wick this high. And, you know, ICT talks about swing highs, which this is being wicked. I get it. It might not be the top swing high, but it's an internal structure. It gets wicked. So when we wicked those highs and closed below it, I don't care what they say, Craig, we going lower. So if you fib this candle on the 2-week bearish order block, it will give you an entry. So that's the 2-week. We're going to drop down to the 1 week. And here on the 1 week, we really, to me, we get a good observation. Okay. So remember the sales signal from the 1 week will be 2 time frames up. We've already seen 2 time frames up would be the 2-month candle. And there's the order block. There's the imbalance of that order block. We tapped into it. We have a bearish weekly order block. If you fib this order block, it's going to give you an entry. You can use that method to get into this trade. Let's go down to the daily, guys. Oh, that daily. All right. For on this daily, we had this wick that took the highs. We had a daily bearish order block. If you fib this daily bearish order block, it's going to give you an area to focus on for your entry. Price did not immediately buy into that zone. It pushed down first, breaking this structure. Now it looks like price is buying back up. Maybe price will just start selling again. Maybe it won't go up to this entry first, but that entry is still valid, even if this sells a little bit further into this zone down here before it starts to buy. Just remember that this order block still needs to be taken care of. How do I know? How do I know? Because there's a imbalance and there's an order block, there's an imbalance, and there's break of structure. So you can't tell me that this area won't be key. It is. It will be, with or without you. But I would be more comfortable saying that this was going to buy if this had been a bullish order block. But since it's not, what we probably going to get is a buy up past the high of this green candle, and it's probably going to keep selling to this zone down here, right? To Kim's zone. And you'll get your bounce from that zone, and it'll buy back up to my area, right? That's what I see on the daily. Let me drop down to the 4 hour. The 4 hour has a bullish move, right? It has a bullish order block. We crossed over. So this would be my key area. If we break through this area, right? If we break through this area, then we're probably going to go higher. But what I think is more likely, we got an inside bar right here at this zone. So what's more likely to me is we buy up, we wick past the top, and we start selling again, just like I showed you on the daily. If not, we'll buy up and we'll break this level, and we'll buy on into our imbalance. Okay, so y'all can see that was the airline view, and you just keep going down lower, it's just going to get lower and lower. But that was the airplane view from top to bottom, how I correlated those time frames. Now, I'm not going to act like that I have 100% control or I'm 100% sure that this price is going up or it's going down. There are 2 options, obviously. It either going to respect this high and sell, or it's going to break that high and go into our imbalance area. Either one is a viable option. I have to wait to see which one it gives them. All right, does anybody need more clarity than that? Or does anybody have any comments or misunderstand anything that I just showed you? Are you guys more clear when it comes to entry methods?
Yes, sir.